the economy. Financial markets around the world fell today on fears of a global recession following Wall Street's dismal lead yesterday. CBS News correspondent Mark Phillips is in London. Good morning, Mark.
Good morning, Maggie. Well, I'm afraid it's another wake-up to bad news morning. Yesterday's big drop on Wall Street was also followed in the Far East.
Not just low numbers, but record low numbers. Tokyo's market was down to its lowest level in 5 years before regaining some ground to close down 2.5%. In Korea, the drop was more than 7%, and in Hong Kong, close to 5%. What traders say they're looking for is the same sort of injections of capital they've seen from governments in the U.S. and Europe.
What market participants want to see from the government is not the announcement, but the actions. So if they take the action, market would respond. And so the announcement is not enough.
And the European markets are down as well, although a little less, between 1.5% and 2.5% so far. Maggie?
CBS's Mark Phillips in London. Thank you, Mark. So the question is no longer are we in a recession, but how deep is it? Let's go over to Liz Claman. She's host of Countdown to the Closing Bell on Fox Business Network, and she joins us to talk about this. Good morning, Liz.
Good morning, Maggie.
This is amazing to me because we kept saying all this time, if the credit markets improve, this will get better. We saw banks start to lend to each other again, and the Dow still tanked. Why?
Well, it's funny because actually, it's not funny to people who are losing a lot of money, but what we saw with the credit markets was, yes, they started to stabilize. Banks did start to lend, albeit on a very, very incremental basis. But then investors woke up and said, oh, now we want to know how much money companies are making. And all of a sudden, we have earnings reports that come in at this time every quarter, and some companies started either missing earnings numbers or outright just blowing it completely. You know, we had Boeing miss estimates, and that upset investors. A lot of other companies couldn't even give what's called guidance, which means how much money will you make in the current quarter. Apple Computer sold millions and millions of iPods and fancy, expensive gadgets, but Steve Jobs specifically said, we don't know how the economic problems are going to affect us going forward, and investors got scared. They started selling.
Already we're seeing this lead to unemployment, and I heard someone say yesterday this is 1974 all over again, where we had that long, nasty recession and unemployment hit double digits. You think it'll be that bad?
I'm not sure. You know, I think that because people were so hesitant to say that we are in a recession last year, I think the American public felt, you know what, it does feel like a recession. So that's actually a good thing. It means that we're already somewhat deeper into the recession, which means hopefully it will be shorter and shallower. But as far as unemployment is concerned, you're really starting to see companies lay people off. Merck, the big pharmaceutical company, said they were going to lay off 7,200 people. And today, the Wall Street Journal is reporting Goldman Sachs is going to lay off 10% of its workforce.
If there's a silver lining, is it that we saw everything else tank and at least the dollar climb a bit?
That's one. It's actually a twofold silver lining. Yes, suddenly the dollar decides to perk up its head and flex a muscle here. The dollar hit a 2-year high against the euro, a 5-year high against the British currency. So that's great. However, we also have seen oil prices plummet, Maggie, down 50% in the past 3 months. And that means people out there actually have more money in their pockets to spend. And that may smooth out the very sharp and rough edges.
Oh, let's hope. Liz Claman, thank you.
Anytime.